Good morning, good afternoon, or good evening, whenever you're watching or listening to this, and welcome to Link Up Leaders, your direct link to leaders in supply chain and e-commerce. My name is Lisa Kinski. I'm your producer and co-host, and joined as always by Francois Jeffrey. Francois, hello, how are you?
I'm doing okay. I could be better.
Yeah.
You know, we had this conversation right before this. I did run into a ticket, some trouble with the law because of this damn registration that I haven't updated in a while, and they caught up to me. So it's
what is a while? Because your birthday
about
did
2 years.
See, that's such nonsense to me. Because your birthday did just recently pass, so one could think that it was recent. I get so frustrated because my old boss was running on an expired registration for 6 years and would never get pulled over. I got pulled over the day after my birthday. And the cop was like, it's expired. I was like, what do you want me to do? Today's Sunday and tomorrow's the 4th.
Yeah, they got me on the automatic, the ATS, I think they call it, where it just, he wasn't even behind me. The little camera that he has. No, the camera that he has picked it up, and immediately he was like, blah, 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 your registration. It's his job. I get it. But come on, it's a registration. We were just in a pandemic for 2 years. Cut me some slack. But it is what it is. You know, the day is going to get better. Hopefully. I'm excited. At the time, funny enough, it's one of my favorite podcasts, Gray Matter, ran by Reid Hoffman, wrote The Masters of Scale, another great book. I don't know if I introduced you to.
We've talked about it.
But also, I think he was the co-founder.
Read it yet.
Yeah, it's amazing. I read it back in California when we were still in the Bay Area. But I was looking through our guest website today, and I saw that, and I'm sure he'll talk about it more, but like in their sort of deck of potential investors that business could propose to is Greylock. And Gray Matter is a podcast, I think, hosted or sponsored by Greylock. They talk a lot about venture capital and money. I think you would enjoy learning about a lot of these things.
Okay. Like I've said before, my podcasting preference isn't actually business podcasts. I prefer nonsense podcasts. But that explains it. When I was on the site for today's guest, who works with Mercury, I saw Greylock on there, and I was like, why do I know this name? Why do I know it? And then I thought it had something to do with that podcast, but I was like, no, it's Gray something else. That's not Greylock.
Gray Matter, yeah. Great podcast. They have on some amazing guests. They talk through just like founder stories. I imagine it's a lot of even companies that we're going to see come out of Mercury and from Mercury's sort of pipeline of getting these companies to the investors. But I completely skipped over this. How are you doing today?
Oh, I'm great.
Good.
I'm great. Yeah, we've, I don't know. What's going on lately? I'm going into another couple of very busy weekends and sticking with the gym as some other present parties may not be.
I'm busy, man. I got things to do.
I too am busy, sir. But no, doing good, doing really good. Looking forward to, like I said, planning a vacation with some friends and looking forward to, Mom's birthday and Mother's Day and all just.
That's coming up, yeah.
Oh yeah, it's fixing to. I know my life is always crazy, but like this, like May, June, July, and then December are always just insane for me. So going into my busy season, quote unquote.
Amazon is a great place for Mother's Day gifts also. So if you're still looking for, if you type in Mother's Day gifts or gift baskets, I sent my mom this massive mug. She has it on like the top of her fridge now. It's like world's best mom. And it comes stuffed with a bunch of things in it, like teas. And obviously you don't use the mug. It's like this big. It's massive.
Just 2 hands.
Yeah. Oh no, it's
too big. It's like a pitcher.
It's a pot. It's like a pot. But no, I'm sure they're going to go through a huge busy season. And, seeing as to how, if, our listeners are tuning in live, don't forget Amazon is raising their shipping costs, their fulfillment fees by 5% on average. They're adding in a XL sized also, or double XL, or I think it's just XL. So if your products were categorized as oversized before, or just a larger item, they may be recategorized and they're going to be even more expensive. Just things to really think about over these next few weeks, I think.
I just saw something else too. And I should have clicked on the
Katina put
article.
something out.
Yeah, about they were raising the price minimum for small and light packages or something like that. Is that what you're talking about?
Yeah, the 5% raise. I think that's it.
Is that what that was?
Might have been.
Because
it might be something else.
The 5% was the for the gas. Well, no, they said that it was because of like gas and like inflation and whatever else.
Yeah, but it's they're increasing those prices on the small parcel items through.
Oh, it's on small parcel.
Yeah.
I
think it's
piece.
on all parcel, but it's the XL size that are moving up a grade. It's neither here nor there. Look out for those Amazon policy changes. Follow Katina with Yoni Mazur over there, posting some amazing information and news on LinkedIn too.
Him and David Dayon, they're both super on top of it all the time.
And Tim Jordan.
And Tim. And Norm.
And all of them. All the nice people.
All of them. Everybody. If anybody had a question of whether or not we are Amazon experts, we just proved right then and there we are not. But enough of our nonsense. Let's go ahead and bring on our guest today. We have with us Travis Price from Mercury. Travis, how are you?
Doing well. Thanks for having me.
Absolutely. Thank you for coming on. So go ahead and just tell us a little bit about your background and what exactly is Mercury. We can start there.
Yeah. Let's see. I started working at startups in about 2014. I don't want to date myself here, but yeah, 2014. Working at startups in Silicon Valley. But then randomly, a good buddy of mine and myself invented a Christmas stocking that dispenses wine. It's called Santa's Flask, and we launched this product online, and it went viral. And I quit my startup job and dove headfirst into e-commerce. Long story short, our first order was 15,000 units. Sitting in a container on my parents' driveway.
That was your first order?
That was our first order. Yep.
Oh, you were all in.
We were all in. I don't know, $70,000 in debt, something like that. We just had this feeling. We just knew, like, we're going to sell a lot of these, and we were very confident that we could do that. In hindsight, that was super risky, but
that's a startup mentality.
That's the startup mentality. And so we hustled and November, I don't know, November's, it was November. And so we're in holiday season now. We don't have any orders, right? We've got 15,000 of these sitting there. Oh, and so we started this campaign where we were reaching out to, a bunch of editors, news publications, influencers, blah, 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 sending free product, et cetera, et cetera. And we don't really know how or who first found it or posted it, but someone picked it up, posted a photo, and from there, some of the largest influencer accounts on Instagram in the humor section, so like Girl with No Job. I don't know if I can swear on this podcast, but
yeah, do whatever you want.
Fuck Jerry.
That's a big account. That's a funny account.
Even Ludacris picked it up. So like these Instagram accounts just posted our product photo with like this little meme, like I think it said something like "my kind of Christmas stocking" or something.
Nice.
And it's like dispensing wine, and yeah, long story short, we sold out 15,000 pieces in 6 days. I
believe it.
It was crazy. Yeah, it was totally nuts. We climbed the rankings in Amazon. We became the #1 bestseller
immediately
in the drinking flask category. And that's what really started my foray into e-commerce in the world of producing physical products and selling them to consumers around the world. Anyways, I'll speed things up here and just say that a couple of years later, we ended up selling that business. I ended up starting a few other product-based e-commerce businesses in the novelty goods space, sold those, went on to work at wish.com, which is very apropos, given there's so many novelty products sold on wish.com. I was in their growth department, sort of helping to launch new business units. And from there, I moved to Mercury, which is a basically a banking stack for startups and e-commerce companies. So we provide, checking and savings accounts, cards, wire transfers, ACH, integrations with all of your tech stack, and we do it all online. So it's basically, you could think about it's like the opposite of like the incumbent bank that you're used to with a physical bank branch and, fees at every corner and really outdated technology. So pretty excited about that mission to streamline banking and finance for e-commerce entrepreneurs around the world. That's my shtick.
Awesome.
That's amazing.
Well, and a quick thank you from the festive winos, of which I'm one of them. This is the coolest thing I've ever seen. This will be coming to the next Christmas party.
Of course.
We'll have to order them for the office now.
Oh my God.
Yeah, different liquor in each one. That's what we used to do at big parties,
That is a brilliant idea.
Yeah.
We'll just make it. We'll switch them up. We'll play a switcheroo. You get what you get. Whatever you pour up, you get.
Each one fits 3 wine bottles, so be careful.
Oh, 3. Okay, interesting.
That's perfect.
That's
We're
great.
a big wine office.
Yeah, we are a big wine office.
Well, to track back a little bit about your e-commerce career and sort of launching it and selling the business, when you were going to sell the business, as you were growing it, did you have any guidance? Anyone telling you what to do to grow it really?
No, not at all. I think that I probably could have done a better job of networking and reaching out to people in the industry to bounce ideas and to gain insights in terms of growth. But no, we didn't really have any idea what we were doing, from day one. So I think there was a combination of trial and error, good execution, a lot of luck. And that's what really kind of eventually led us to have a business that, had a price on it and people wanted to buy.
And when you were going to sell it, I mean, not having any guidance, and I imagine at the time, the support that's out there on like YouTube and whatnot, it's great, but it doesn't work for everyone. They may it seem very cookie cutter, but it's so much conflicting information. When you were going to sell the business, did you have any guidance, or I guess who did you reach out to? Where did you look to for any education or information?
It's a great question. So I was a member of the eCommerce Fuel group. I don't know if you guys are familiar with that group.
I've seen the name.
It's run by this guy named Andrew, who's also a seller himself, and it's a private e-commerce community of sellers doing $1 million or more in revenue. And essentially, you can network with other sellers. You can ask questions such as, "Hey, I'm ready to sell my business. Like, what should I do? How do I do this?" And that's where I got connected to a company called Website Closers, which is a brokerage for e-commerce businesses.
And through all that also, I mean, a big part, particularly, I guess, going through Mercury and even, going through Mercury's list of investors is getting your business ready to even sell. And I know a broker can definitely help out with that. But did you have any knowledge about, what your P&Ls were looking like, or, your EBITDA or anything like that?
We kind of did, just because we had to file tax returns every year, obviously. Okay. Which, at first I was doing myself, and then I was like, I have no idea what the hell I'm doing. And then hired an accountant to help. And so we did have balance sheets and P&Ls that we could show. But there definitely was just a lot of due diligence to kind of provide like a full package to prospective buyers for them to kind of almost like a lookbook, like, look through here. This is what we're doing from a supply chain standpoint. This is what we're doing from a marketing standpoint. Here are the financials, like, et cetera, et cetera.
Do you find that that was very similar to the startup world and sort of the VCs that you guys work with? Are they looking for a similar type of pitch deck?
Yeah, I think that you can equate it to like a startup that has a pitch deck that's looking to raise like a seed round or a Series A. I've never seen any sort of pitch decks or lookbooks for startups that are looking to get acquired. But I would say that it's a pretty good comparison to make to the early stage startups looking to raise money. Yeah.
Okay. Yeah, because I was just telling you a little bit about this. It fascinates me how different when we were based in the Bay Area, right in the Campbell area, actually, the different conversations that you would hear startups have about trying to raise seed capital or even going out for VCs or, other angel investors, uh, versus the conversations that you see in the e-commerce world today. Where they're very focused on just selling off their business rather than raising capital to continue growing it. And I think you're starting to see more businesses like a Crewme, I think is one of them, that just puts in more money. That way you can continue growing. But I guess what sort of differences are you seeing in businesses today from the banking standpoint of are they trying to get into growing their businesses more or selling their businesses?
Yeah. Um, Let me break this down kind of from like a high level. So essentially, back when I was selling the business, even in I think it was 2017, um, a lot of these what we call our alternative lenders did not exist. And so
Hmm.
you have the rise of these quote unquote alternative lenders, and whether that's revenue based financing lenders such as Clearco, Wayflyer, et cetera, or whether that's merchant cash advance like Payability. I think maybe a Kurumi does something similar. I'm not entirely sure, but there is just like, I want to say dozens now of options for entrepreneurs who have businesses that have some traction and some sales, typically at least 6 months of sales and $10,000 to $20,000 a month in revenue, to go out and get non-dilutive capital, from these lenders to scale their business, to invest in more marketing and more ad spend and more inventory, and really keep that machine going. In the past, folks
To
would really rely
to
on,
pause
yeah.
to pause you really second, can you elaborate on non-dilutive?
Yeah, so non-dilutive just means that the lending party is not taking an equity stake in your
Hmm.
business.
Mm.
So this is the opposite of Shark Tank, right? Where Mark Cuban comes in and says, "I want 30% of your business." No, these companies will come in and say, "We want 0% of your business, and we're going to offer you these terms for financing, and we're gonna take a payback as you sell through a product,
Hmm.
essentially." And it's all based on revenue of your business. It's not based on your credit score. It's not based on the business's credit score. Um, and there's other financing options as well besides revenue based, but all of these options are non-dilutive, and
Okay.
that's typically what a lot of founders are looking for, right? They don't want to give up equity on their cap table, because then when they go to sell, they only own 70% of the business instead of 100%. And that could be a significant amount of money. Um, and then you also get into like issues of like, how much voting rights do the shareholders have,
Hmm.
and say do they
Mm.
have in certain ways that you run your business. So yeah, but I guess what we're seeing is like, yeah, a lot more brands are well, I guess twofold. They're looking to raise capital to grow the business and to invest in growth. And I think also it's somewhat, in the cards that they've seen brands like Spanx or like um, you know, Casper, even though they kind of failed, but like, those types of brands that got massive, right? Like over $1 billion valuations, and even some of them went public. And it's like,
Mm.
there's we're now seeing more and more e-commerce entrepreneurs, D2C founders say, "Hey, wait, maybe we can do that,
Hmm.
maybe we can get to that level." Whereas I think previously most people just thought, "Oh, well, just tech companies and venture capital backed, technology, SaaS, et cetera, companies get to that level." Um, so I think that's interesting. And then on the other side of the house, you see this proliferation of the aggregators, which are
Hmm.
these, like I think you mentioned earlier, but these are holding companies. They're going out and raising billions of dollars from institutional money, like venture capitalists, and then they're going out and they're acquiring e-commerce brands, by the dozen, and building a portfolio of brands. And what that does to the market is it actually injects a significant amount of buyer demand into the market for these e-commerce businesses and for the owners of these e-commerce businesses. So, back when I was selling, I think there was maybe like one or two, brokerages where you could go meet buyers. Now there's like dozens, and there's dozens of aggregators. And so people are fighting. They're all fighting for the same businesses, right? And so as an e-commerce entrepreneur, you can think about that and say, hey, wait a second. If I can build a sustainable business and get to a certain point, the multiple that I get upon exit is going to be pretty dang good, at least relative to what it was even 5-10 years ago. So it's very exciting.
Yeah. Do you think it's just because once the first few entered, they started raising this institutional money where they can prove, hey, this is a valid business model? And so that's, I mean, we tend to see a lot of, aggregators, it doesn't matter what size, could be, they're raising billions of dollars, or they have, a few $1 million that they're starting out with. They're considered aggregators. Do you think it's because they started seeing institutional money come in where the smaller guys are starting to also enter into the market and just sort of raise? And we've seen absolutely ridiculous multiples, like 6, 7 time, 8 time multiples, which would be crazy. You would consider some of those companies almost unicorns. Do you think that would be, where do you see this market trending? Because there's fear that I've heard that it's going to be very, very difficult to maintain this very high multiple model, I guess, across all these different aggregators.
Yeah, I think we're definitely in a bubble right now. Across all asset classes, but particularly in this space, it's going to pop, and what's going to happen is you're going to have, a consolidation, right? So there's going to be, I don't know, maybe 5, 10 out of 100, aggregators that make it and that are big enough to where they can weather the storm. So like we saw even with the supply chain, like fiasco that's been happening in the past couple of years, and COVID, like it's been really hard for the small time aggregators to weather that storm, right? And to keep product consistently coming from Asia, consistently stocked in FBA warehouses, and we've seen some die and go out of business. So, yeah, I think that right now, I don't know when that's going to happen, right? I think we're still in the growth phase of this whole thing. So if you're listening and you own a brand or you're thinking about starting a brand, like probably still a good time. But maybe within a 5-year horizon or something, we'll see. Maybe we'll see a decrease in multiples, but right now it's just crazy compared to what it was. So we're seeing 30 to 50 times monthly profit multiples on Amazon businesses. And
why is that? Just
more
money
because there's so much demand. There's so much money out there, and they're all trying to buy the same strong brands. And there's not enough brands to go around. So it's a feeding frenzy. And these aggregators, especially the big ones, they want to be like Procter and Gamble, and they want to own all of the brands of tomorrow. So, yeah.
Well, and we'll give a shameless plug to a friend here too, so you can increase the value of your business. Go buy Joe Valley's book, The Exitpreneur's Playbook.
Yeah.
He teaches you all the secrets on how to get the most out of your business, and we'll link that in the episode.
Nice.
Well, how does this all play into banking? Because when I was checking out Mercury's website, it positions itself as a non-traditional banking solution for non-traditional businesses, right? I guess how do you differentiate from just a standard bank aside from just the physical location?
Yeah, I guess first and foremost, I guess the word traditional is becoming, especially when you're talking about non-traditional businesses. I think businesses that operate online, almost for the most part, 90 to 100% online, are becoming more traditional. But yeah, so like to answer your question, incumbent banking institutions, Wells Fargo Bank, Chase, Bank of America, et cetera. These institutions have very dated technology. They haven't really focused a lot on the customer experience as well. They're more interested, frankly, in lending out those customer deposits, doing high frequency trading, whatever it is that they do, to get massive profits. And so there's been kind of this sort of forgetting about like who's actually giving you the money, right? It's your customers. And what's the experience been like? What is that current experience like? Well, let's walk through it. Let's say you're an e-commerce entrepreneur and you're working from your laptop and you're nomadic, you're moving between offices, between houses, et cetera. You don't want to have to go into a physical bank branch to open an account, to add someone else to an account, to send an international wire transfer. And all of that comes with time, right? It wastes your time and it wastes your money because you're paying fees for literally everything. And it's just a really poor experience. And it's because they haven't been quick enough to adopt the right technology to be able to effectively do away with the physical bank branches. So with Mercury, what we've done is we've built a banking solution from scratch with, and founders have built it. So it's by founders for founders to say, let's flip this entire narrative on its head and let's just build the bank essentially or the banking products rather that we want and that like we as a consumer would be like delighted by, right? And so, yeah, with us, there's no physical bank branches. Onboarding can be completed in 10 minutes through an online application. We can turn around an approval for an account typically within 2 business days. Usually it's quicker. We also have no fees. So there's no fees for opening the account. There's no overdraft fees. There's no minimum balance requirements. There's no wire fees for domestic and international wires, which is like a huge savings for businesses. And, so it's not just the cost. It's not just the user experience, the ability to spin up, checking and savings accounts instantaneously, virtual debit cards instantaneously, send wires with 3 clicks. Like it's not just all of the amazing technology that the team has built, but it's also the convenience and the fees, right? Like we don't want to, as entrepreneurs, feel like the banks are the bad guys, are the ones, taking some of our margin. And so we're really here to support entrepreneurs, and most of us have been entrepreneurs. And so we're building products and services to serve you, the entrepreneur. So we're very excited about that mission. And obviously banking is, everyone needs banking, whether you're in business, right? And so we have customers, all over the world, because we're also open to entrepreneurs that are maybe located outside of the US to open accounts with us, which is kind of a paradigm shift from traditionally what, let's say, an e-commerce entrepreneur located in France but wanting to open a US business bank account had to do in the past. They actually literally had to get on a plane, fly to New York City, go into a bank branch, presents all this paperwork, probably a language barrier, and and then a week later, maybe they'll hear back and it'll be like, yes, you have an account. Or like, no, you don't. And either way, they're out like $1,000, $2,000 for the flight, hotels, whatever. And it's just a massive, cumbersome process. And so I think that's a really, really valuable service that we offer for the international community. So we say, hey, we think entrepreneurship is global. And, if you're selling products or services and you're building a business, like, why should we shut our doors to you and make this like a very difficult process? So yeah, long story short, we support sellers all over the world.
How does that work without charging anyone for anything? It sounds like.
Yeah, great question. Great question. So number one, I need to caveat this by saying we do require that you have a U.S. corporate entity set up in order to have a Mercury account. But these days, you can, even if you don't have one, you can easily set up like a US LLC remotely. We have partners that can help facilitate that. It's typically under $500. You can do it from your couch in France. And so that's really not the biggest barrier to entry anymore. But, I just want to caveat what I said earlier by saying, we do accept all e-commerce entrepreneurs around the world, but you have to, have a US corporate entity. And you can't be selling like, firearms, drugs, et cetera, the whole list. But to answer your question, we make money in a couple of different ways. One is on interchange. card usage. And what that means is when you, the e-commerce founder, or your team is using our cards to pay for Facebook ads, for example, MasterCard charges Facebook a fee for Facebook to have the ability to use MasterCard's payment rails and network, right?
Right.
And then we, Mercury, take a percentage of that fee. So the customer doesn't get charged anything, right? But it's really the vendors that Facebook, Google, wherever you pay for ads online, wherever you pay for inventory, and then we take a small percentage. So that's one of the ways. We make like a little bit, banks make a tiny bit on deposits. And then, obviously credit products, we make a small spread too. So banks really have very, very slim margins. But at scale, it adds up. So
yeah, and you don't have the overhead of having all the physical locations, of needing all the tellers, and yeah, it makes sense. I mean, it makes a ton of sense. Lisa, I cut you off.
No, it's okay. I was just going to say that, I agree with you that entrepreneurship is definitely, international or global, if you will. I mean, every time we talk to Jake Barnett, he's in a different country, and he, maintains his positions. But I did have a question of, is there any hesitation, I guess, coming from, and maybe not because their business isn't, brick and mortar based, but any hesitation coming from these business owners that there is no physical location with Mercury that they can visit? Because, I mean, at least from the consumer or the independent banker, I want to be able, if I'm having a problem, to go to the nearest branch and talk to somebody. That gives me a little bit of a feeling of security. And that's kind of missing if it's entirely web based. So does anybody ever bring you concern about that?
So it's a good point. I would say the customers that work with Mercury don't have that concern, and that's why they're with us. However, I also think that there's a new generation that maybe doesn't really care to go into a physical bank branch and would rather actually have the entire experience be online. I will also say that we have dedicated chat, phone, and email support, and it's very good and very quick, where you can actually talk and even chat with a live human. But yeah, I mean, if you're if that's your modus operandi and you want to go into a physical branch and have that relationship with your the teller at your bank, like by all means do it. But yeah, it's really like for the businesses that we serve, typically we don't see them wanting that experience. And the last thing I'll say is, if you're dealing with cash, we're also just not a great fit, right? Because if you're like a brick and mortar, mom and pop store, and you're dealing with a lot of cash, like we don't do cash because we're 100% online. So yeah, we definitely serve kind of a specific niche, which is startup and e-commerce businesses that are operating online. Yeah.
Gotcha.
Yeah, Lisa's an old soul. So
I am.
Don't mind Lisa.
Yeah, don't mind me at all. I'm a money under the mattress kind of a person. But
go ahead.
I actually have a crypto question.
Go for it.
Just because we talked about the aggregators a little bit earlier, and I believe I might be misquoting this. I hope not. Elevate just came up with the option to get your buyout in cash or coin. You can pick. Then we talked a little bit about maybe more e-commerce, merchants accepting crypto as a form of payment. Do you guys deal in crypto at all and help with that?
Not yet.
Not yet.
That's all I can say.
Okay. Ooh, okay.
Well, we will leave it at that too. But one point I definitely want to talk about is the network that comes with Mercury. And the one very interesting piece that you don't see at any traditional bank, maybe as you start to grow and maybe, as you develop the relationships with them, they might have some people that you can talk to, but the investor network that comes with Mercury, and you have Mercury Raise, both for seed and Series A. I find that absolutely fascinating. Can you talk a little bit about that?
Yeah. I think it's a very unique offering and programs that we that we have for Mercury customers. So I'll kind of break it down into the different buckets. So we have what's called our investor database, and that is this curated database of typically seed and Series A sort of, angels and angels style investors who are looking to make investments in up and coming businesses. And it's filtered by industry category, what these investors, are looking for investment, et cetera. So it's a pretty cool tool that you could use to just kind of filter and look for people that you might want to have conversations with for investment in your business. And then we facilitate those intros. And so that's one program that we have, and that comes, obviously with every Mercury account. Number two, we have kind of along the same lines as, raising capital. We do have our Raise program. And so what Raise is it's almost like a Shark Tank online. And we, every quarter, just about, we do a raise, whether that's a seed raise, a Series A, or a e-commerce DTC raise. And we open up registrations, and, companies will come and apply to essentially pitch their idea, their business, in front of a panel of investors who we've sourced, from kind of the best, e-com type operators and investors in the space. If we're talking about the D2C Raise program itself, we've partnered with stonks.com on this. I don't know if you guys are familiar with Stonks. It's a pretty cool technology platform where basically you can pitch live your business, you can show the slide decks and everything, and then you can raise money in real time with a progress bar. So all these investors are listening, right? And they're asking questions, and it's like Shark Tank a little bit, but it's online and it's instant, which is crazy. It's really cool. And so what we do is I'll just run through kind of our last D2C Raise program. We had over 800 attendees, live in the audience. These are investors, these are brands, these are people just interested in what this program is. And then we had, I think, 5 or 6 brands that kind of made it to the final round, so to speak, that had the opportunity to pitch in front of this audience. And from that process, we were able to solidify commitments for over $2 million for these brands. Wow. So it was really great. And we just really, want to create programs that are helpful and support the entrepreneur, the founder. And we think that other financial institutions or technology companies aren't really doing that. They're kind of just like, hey, we built this product and go use it type thing. We want to create an entire ecosystem where we're here to support you every step along the way in your growth journey. So those are 2 programs that are interesting. And then I guess I'll talk about one more, is that we do have a capital team, and we essentially have a couple products within the capital team, and they're, coming from backgrounds of capital and relationship management, and we can set up calls, and we can really dive into what your business needs at this stage, whether that be, an infusion of capital to fund inventory, whether that be an infusion of capital to fund advertisements, or whether that be venture debt, whether you just raised a round and you just want to supercharge that round with venture debt, we also offer. So we have a network of capital partners that we work with. And then we also have our own capital solutions too. So that comes, with every Mercury account. It's in the back end. Once you're in the account, you can complete a little quiz, and then we kind of offer up what we think is best for your business, and then have a conversation with one of our folks based on that.
Gotcha. The second option you said kind of sounds like, you remember back in the day, they used to do those phone-a-thon,
phone-a-thon.
I don't remember what they were called, but where you call in, commit a certain amount of money, and it was a fundraiser type deal, and it was televised, and it sounded like that. That's just what I was imagining. Sorry.
Yeah.
Yeah, it makes sense. I mean, particularly these past 2 years, with as you mentioned, supply chain being top of mind for everyone, and so many businesses and brands not being able to sustain for many reasons, but mostly, in my opinion, it's because they focused on supply chain management instead of supply chain resiliency. But that's a whole different topic. But just not enough cash to have inventory. Do you see that being a big reason that people are starting to sort of get these injections or infusions?
Yeah. So, yeah, I kind of think about this as like the biggest issue, biggest problem facing e-commerce business owners and the e-commerce business model in general, which is this idea of the cash flow conversion cycle. So with e-commerce, as opposed to with technology like a SaaS product, which is build once, sell twice, sell a million times. With e-commerce, you have physical products. You got to produce the widgets before you sell them, and you have to continue to produce the widgets to sell more. And so, you'll pay a supplier, let's say, I don't know, $100,000 to produce, a container's worth of goods over in Asia. It'll take them 30 to 60 days to produce those goods. All of that time, your money is tied up, right? Then it'll get on a boat, and it'll take anywhere from 30 to 60 days to get here. And we're seeing crazy supply chain, congestion, which is not helping that timeline. So that's another 30 to 60 days that your money is tied up. Then it has to get on a truck or a train to get into a warehouse. That's another week. Your money's tied up. And then finally, it's in your warehouse. You can start marketing it. You can start advertising the products and turning that inventory back into cash. And that's when you kind of have that cash that you can then reinvest into the business, into inventory, into marketing, etc. And so there's basically this idea of increasing or smoothing out cash flow conversion cycles for e-commerce entrepreneurs and operators. And one of the ways that you could do that is with inventory-based financing, right? Because then you can either you can finance that inventory over in Asia with money that is not your money, it's someone else's money, right? And it frees up your capital to do a lot more things, right? And so, yes, I have seen a proliferation of just need. Like every e-commerce brand needs capital to fund inventory. The catch here is that typically you have to be a little bit scaled in order to qualify for this financing, right? So typically it's anywhere from $10,000 to $20,000 minimum in revenue per month for at least the last 6 months until you qualify. And so there is a little bit of an area in terms of stage that where you're at in your business, where it's either friends, family, credit cards, angels. We say friends, family, and fools. That's kind of a joke. Who are investing in you. Maybe it's your savings. To get you up to that level, to get you to that next stage, to where you then qualify for financing. But it's a big problem. It's a big problem, and there's a lot of companies trying to solve it right now, which is great. It's good for the industry as a whole.
Yeah, and the industry's definitely matured over the past 6 years that I've at least been seeing it and watching it. It's crazy just seeing the infrastructures that are being built right now. I'm excited to see what happens in the next 5-6 years. But when it comes to smoothing that out, Lisa actually had a funny acronym that we came up on one of the webinars. It's the 3 W's that you never want to really mess up, and that's you always want to have product. Working, water, and warehouse. You always want to have enough in the warehouse to where the stuff on the water can replenish the warehouse, and the stuff working can replenish the stuff in the water.
I like that.
Yeah. Lisa came up with that one a while back. When it comes to next steps in a company's business when they plan to sell, but when they have, let's say they're working with Mercury, they're planning to go to any type of seller. Are they working with your team to put together anything for those potential buyers, or are they working independently?
No, so they're not working with our team to put any sort of materials together. Obviously, we provide them with bank statements that will support, whatever documentation they need to provide as due diligence for the prospective buyers. What I will say is we do have partnerships with brokerages and folks looking to buy e-commerce businesses. And so we can help facilitate those intros. But then it's really, between the entrepreneur and the broker to kind of take it from there with next steps.
Gotcha.
And I meant to ask when you were talking about the capital team, is that the money that they're getting, is that a dilutive? How'd you call it before?
Non-dilutive. Yeah.
Non-dilutive. Is it all non-dilutive?
For the most part, yes. Well, actually, yes, even venture debt. So they're non-dilutive. So essentially meaning no one's taking equity in your business. They're debt products. I mean, I think it's really up to people's own subjective, views about this. Sometimes it makes sense to raise equity, right? To have a strong investor cap table that are very strategic partners, maybe that have let's say you're in, I don't know, coffee, like DTC coffee. You might want to get someone who's scaled up Bulletproof Coffee, like the founder, to invest a little bit and to be, on your cap table so that you can kind of, learn from the successes and the failures that this person has experienced. So I see benefits and I see pros and cons to both sides. Obviously, at the end of the day, if you're really just looking to sell a big business, maybe you want to keep as much equity as possible, but in order to get that business to be big, you might need those strategic investors. So it's you got to weigh the options there and what your growth goals are.
It's funny. We talk a lot about D2C coffee on this podcast. I'm surprised it hasn't come up yet.
Oh yeah.
I'm a big fan of Four Sigmatic, huge fan. Four Sigmatic, if you're out there, make sure you guys sponsor. But when it comes to I guess the growth of the company is all pendant on the owner and what they want to do with that company. Are you seeing any that come in with a very, very set strategy of, hey, I plan to grow this business, at least coming to you guys, or I guess coming to the brokers that you guys make the introduction to? I plan to grow this business in the next 6 to 12 months and I plan to exit. What do they do with Mercury at that point?
Yeah, it's a good question. We definitely have people that even me personally have talked with that their whole goal is to start a business, scale it, sell it, and then do it again. Or do 3 at a time. Right. And then in terms of sorry, your question was, what do they do with Mercury at that point?
Yeah.
Well, typically what happens is these people are serial entrepreneurs. It's just in their DNA. And so then they'll spin up another account to start their next business. Right. I actually, a lot of folks using Mercury have multiple businesses and multiple business accounts that they're running things through. So, it's a very sticky experience. It's a fantastic product. I actually personally switched my Amazon store. I sold that one, but I was working with Wells Fargo about a year ago, and I was like, this is ridiculous, and I moved over to Mercury. And it was just night and day. And it's once you kind of experience something that's so much better than the alternative, why would you go back? And so, even if a business, has one company on Mercury and they go to sell it, pretty good chance they're going to come back or at least tell their friends, that it's a good option for when those people start up a brand.
Sure.
And is Mercury only based in the US, or let's say I plan to expand internationally? Does Mercury have any solutions for if I plan to sell into Amazon EU, for example?
It's a great question. We do not currently. So we can certainly kind of recommend some other quote unquote neobanks over in the EU. But yeah, we don't provide IBAN accounts. We provide US FDIC insured US business bank accounts.
Gotcha. Okay. But they can be based outside of the US. They just have to have the US, entity or whatever. So that is, it goes one way, not the other.
That's right.
Got it. Okay. I can see how that could be confusing. But like from an outside perspective, it's like, wait.
Yeah. It's like, if you're located over in the EU and you want to sell to the largest consumer market in the world, well, actually, maybe now China is. But anyways, Americans, there's a lot of Americans here and we love to buy stuff, right?
Indeed.
So
We do?
if you, if you want to sell to us, then, you're going to want to set up a U.S. entity, a U.S. bank account, get all those ducks in a row. But if you want to go the other way, let's say like I'm here, located in California, and I'm like, I want to sell products in France. Like, I don't really know exactly how to go about that. I have some partners that I could recommend that could help through that process. But yeah, it's so you can see kind of how perceivingly challenging it is to think about those sort of things. Like, put yourself in the shoes of someone over in the EU or the UK trying to figure this out. And so we make it really easy. We kind of explain the whole process, and we're kind of more like consultative than just, hey, sign up with us and this is what we do type thing.
Sure. And it is strictly US, not also including Canada, right? Just to be super clear.
Yep.
Okay. Awesome.
Yep.
Sometimes I think we get accidentally like melded together. Sorry.
I imagine it's daunting, particularly having to go to a bank that I've always been treated like shit, at least when I go to the bank. Maybe it's because they just don't like me. I don't know. But I imagine coming from overseas into a US bank and asking these same questions is something that maybe the bank isn't experienced with, first of all, because not a lot of them are experienced with e-commerce particularly. But also you just don't know what questions to ask. What does that onboarding sort of look like? Do you have sort of do you have the opportunity to just talk one-on-one with someone before they decide to go with Mercury?
It's a great question. And I totally agree. Like, even as a US citizen and seller, you go into a bank branch, let's just say Wells Fargo. I'm sorry to shit on them today, but like, I just can't stand them. They don't understand e-commerce at all. I'm like, like I'm selling these Christmas stockings online. They're like, what the hell are you talking about? And so yeah, there is that aspect. But so in terms of our onboarding flow, we do have a support email, help@mercury.com, that they can contact our support. We also have a sales email where if they also just have some questions before signing up about stuff works, they can contact sales. And then other than that, you can just start the onboarding flow just to get a sense of like what we ask. And then, see if you have questions from there, but it's pretty straightforward. It's basically like, first name, last name, address, business entity, articles of incorporation, like upload them, scan your passport, describe what you do, what your business does, provide your URL to your web store. And that's it. And then, if our onboarding team has additional questions, they'll follow up, but it's pretty smooth. It takes like 10 minutes. And then if they have additional questions, we're really quick to respond.
And this for any size business, right?
Yep. So we don't have any minimum balance requirements, like I mentioned. So really, you could open a Mercury account, deposit $1, like it doesn't matter if you're just starting out, right? Or if you're scaled up and you're $100 million business, and you want to deposit tens of millions, we do that too. No problem. So
you hijacked my closeout question.
I did.
How dare you? But Travis, thank you. We are kind of like towards the end of the episode. If folks, what's maybe one final thing that people should know about Mercury?
About Mercury, I would say that we understand you. We've been in your shoes, and that in a banking partner is almost unheard of in the United States and globally, frankly. And so just know that like when you work with us or when you decide or are thinking about working with us, that we only want to make your lives easier. We want to save you time, money, and headache. And we want to build products and services into the future that support you. So, that's what I'll close on. And obviously people can contact me directly, on LinkedIn, on email, like if they want to chat too. So
awesome. And then they can find more information just by going to your website, which is mercury.com.
Yeah. So mercury.com /eCommerce. If you're in e-commerce, that'll give you more information about our e-commerce solutions. Also, yeah, our main website, mercury.com.
Perfect. I'm surprised you guys were able to get that URL.
Yeah.
Honestly, with Mercury Marine Sports being around for so long, I'm surprised they didn't take mercury.com.
We just recently acquired it, actually.
Oh, yeah, okay. Well then, maybe Mercury Marine did have it.
Someone had it. I don't know who.
Somebody had it.
Yeah.
Awesome. Well, I hate to bring up the show again, but was Mercury at Prosper by any chance, or are you guys going to be speaking or exhibiting at any of the upcoming shows, or is there maybe anywhere that they can, reach you guys in real life and learn more?
Yeah. So we were at Prosper. My colleague Tyler was at Prosper. I was not. And then in terms of upcoming shows, we're not sure yet. We're looking at a couple. We haven't really decided yet on which ones we're going to be attending. There's a lot, and there's also schedules to be mindful of. I think I'm going to like 6 weddings. My team is going to
I'm
weddings.
not the only one.
Yeah.
Goodness.
So we got to figure that out. But yeah, you'll definitely start to see us more in person. And we'll do meetups and events and stuff like that. So it'll be fun.
Perfect. And then again, for anybody who wanted more information, it is just mercury.com. That'll be available in the description of the audio and the video experiences. So Travis, thank you so much for your time. We appreciate it.
No worries. Thanks so much for having me.
Absolutely. And thank you for everybody who tuned in. If you guys liked what you heard today, be sure to give us a thumbs up, comment with your thoughts, share this episode with your friends, subscribe to the show, and turn on those notifications for updates. And wow, I just totally lost my train of thought. That
You're
was
out of
so
it.
weird. I don't usually mess this part up. That way you're always up to date on our new conversations with leaders in supply chain and e-commerce, like Travis Price with Mercury. So thank you all so much. And we will be back tomorrow. And then, just always come back. We're here.
Always come
Monday,
back.
Wednesday, Friday.
Thanks, guys.